Good morning and welcome to the market forecast. It is Monday, April the 5th. My name's John Hoagland. Thanks for trusting me with your time. It is the beginning of another new, exciting week. Make sure you embrace the possibilities and embrace the change. Don't fear the change. It's good to see everyone this morning. Got a full week of trading here in front of us, although starting off this week, many European markets are off today for the Easter Monday holiday. Even some of the Asian markets are closed, so probably see some muted activity in some of our markets today. But as always, we're going to look at these markets in context through the lens of risk management and always practicing patience. I hope that you've had a very nice long weekend and a joyful and happy Easter and end of Passover, whatever you celebrate. You're looking forward again to another full week this week. As far as economic numbers this morning, 9 o'clock, we're waiting for factory orders as well as ISM service index. None of them expected to be excessively all that impactful, probably. And it's a pretty slow week as far as economic numbers are concerned. Tomorrow, we're looking at the job openings and labor turnover survey at 9 o'clock Central. Wednesday, probably our busiest week for economic numbers, international trade. Of course, the EIA petroleum status report. And then, of course, 1 o'clock on Wednesday, we'll have the FOMC minutes. It's been 2 weeks since the meeting. The minutes come out on Wednesday. Thursday, typical jobless claims, nat gas, although it looks like around 11 o'clock Central Time, Fed Chair Powell is going to be speaking. And then on Friday, of course, we have PPI final, probably not that impactful, wholesale inventory. So a relatively slow week for economic data this week as far as, what kind of looking at the news this morning. Obviously, if we're looking at the markets, we see that the strength in the U.S. stocks just keeps on keeping on after Friday's 916,000 surge in non-farm payrolls data, the biggest jump in jobs in 7 months. That, along with fast vaccinations and more government stimulus planned, and investors may start to kind of focus on corporate earnings, which will be starting again here very soon. Hopefully finding some more stability and some more good news in the earnings. As far as crude prices are concerned, they're pretty much remained range bound in WTI, even though the OPEC Plus and Iran have decided to boost supply from May into July. So a little bit of perhaps downward pressure in that crude oil market in the coming days and weeks here. Make sure that you like, share, comment, question, feedback, and heckling are, of course, always welcome. Taking a quick look just before the forecast this morning at the VIX, up slightly at 1752, dollar index down slightly at 92.84, and the 10-year yield up slightly at 1.725. All right. I'd like to always got to say good morning to my friends and family here. Felix, back at the top of the list today. You win the prize, Felix. Ed Nelson, good to see you. Brian Murphy, another amazing week ahead. Yes, let's enjoy it. I think it's important that something you point out here, Murph, is that we do enjoy this. As difficult and aggravating and exasperating and exhilarating as trading is, it's important to remember we do enjoy this. We do this because of a number of reasons. It's fascinating, it's challenging, and that's all part of the enjoyment of it, if you ask me. So, good morning, Will. Good morning, my brother Rick, Bill, Clarence, Troy, Angelina, Adam, level 2, good to see you. Let's light this candle. Absolutely. Andre, Caesar, Keith, good morning. Nick, good morning. Happy Monday, everyone. Happy Monday, Top Step. I wonder if that's Dan. Good morning, Dan. George, JD, the Dancing Bear is in the room. Hope you had a nice weekend, JD. Bulldozer, Laura, James, Steve, Kevin, Tim, level 2. Low volume as expected. 95,000 contracts overnight. Yep. Joseph, Emma, we're going to keep look at how we're going to try and handle that here this morning in the charts. Tic Tac. Tactic, I should say. Good morning, Mr. Shine. Good morning, Trading Research. Rob T. Burns, I hope everybody has a good week, 100% for sure. Theodora, good morning. Right. Uncle, Dag, good to see Ashton. Savant Playback, good morning. Happy Monday to you as well. I'm going to put the link in for group coaching this Wednesday at 1 p.m. Central. I've got a few questions. There were a couple that I missed that came in late last Wednesday. I'm going to address those. A couple more coming in. Always looking forward to a good session there. And not to mention, on Wednesday, April the 7th at 3 o'clock, you're going to have the chance to talk to and ask questions directly to the founder of Top Step, Michael Patak. Dan is going to be hosting a question and answer session with the good founder and chief visionary officer for Top Step. So lots going on. A week from Wednesday, the good Dr. Menaker will be back with us at 3:15 Central, I should say, just after the markets. We'll start giving you the link for that here coming shortly. And without further ado, why don't we jump into the charts here and see what we're looking at. As always, viewing the daily and crude first, just going from left to right. So crude oil range bound. Not a lot of directional activity here. We've got about 2 weeks of balance going here, just kind of hanging in this area here. No changes to the weekly kickoff levels, 64.15 the high, 68.25 the low. OPEC ups production. That's one thing that we'll be keeping in mind as we can continue to look through this week. Technically, short time frame controlled, yet a little bit volatile. We've seen some pretty big ranges in this area of balance, and I don't expect that that's going to stop. I think we're going to be really kind of on a hair trigger as far as any news and production and demand numbers coming up here this week. So looking for maybe some more range-bound activity, but a little bit more volatility, maybe some bigger ranges. Taking a look at the 30-minute chart here. We've got some overnight shorts here. Settlement on Friday was all the way up here at 61.45. The settlement from Friday remains as we didn't really have any activity on Friday. Settlement on Thursday remains as we didn't have any real activity on Friday. So we're kind of looking at an overnight inventory to the short side here, but at the same time, we're opening in range and value, which suggests patience. It looks like we've had a pretty good push to the downside. Looking probably like our opening range is the high of the session here. But if I've missed this move, I'm relatively confident there's going to be a better trade location for crude traders today. If we're going to stay range bound and if we're going to stay in short time frame control, if that's our hypothesis, then we're looking for short time frame levels to look for executions. Our value low looks kind of inviting for an opportunity. How about the lows from Wednesday and Thursday? Also looks like maybe an inviting opportunity. And then, of course, weekly kickoff low just below that at 58.25. So I'm not really worried if I've missed this initial move here. I'm thinking as the day goes on, there may be a better trade location for us than the opening range right here. So stay patient, as we are always mentioning. We always want to try and stay patient and just let the market come to us and say, you know what, here's your spot. If we're looking for trades, we're going to find them, and they may not be the ones that we really are looking for. So stay in the game throughout the day and wait for those good trade locations to come to you. Speaking of trade locations, how do you find good trade location in the S&Ps? It just keeps moving higher and higher and higher. Jobs numbers, government intervention keeps that upside pressure. We're at all-time highs in the overnight session today. Of course, upside structure is remaining. The market just keeps enticing, I think, short time frame and medium time frame traders to pick tops, and then it just runs through them. It was evident on Thursday in the late spike that we put in at the end of the day. We're going to look at that shortly. Weekly kickoff high in the S&Ps this week, 4110, through the kind of big fat round number at 4100. It is largely chosen as just a measured move. We don't have any information up here with which to lean on. Volume and open interest was lower, of course, in the Friday holiday. So the open interest is a little bit blurry this morning. We're not going to be able to really see the open interest as it ended up the week as of Friday until later on today. So, taking a look at the 30-minute chart, settlement all the way down here. We've got a lot of longs in this market, but those longs continue to keep getting paid day after day after day. This is our late spike here at the end of the day on Thursday. Okay, Friday wasn't really much to speak of as far as opportunity was concerned. I'm going to put a profile up here just so we can see where we were in the abbreviated session on Friday. Now, remember, this is regular trading hour session only, so there wasn't really much of a regular trading hour session. You know, if there was one, it probably settled right around up here. So what are we looking at? Well, I think we're really just kind of focusing on, because of the lack of volume, the fact that it was a Friday holiday, we're kind of focused on where we ended the day on Thursday, which again, settlement here, 40-10 even, 40-10 even-ish. Going to make that a little bit better. Here we go, 40-10 even. So we've got a lot of longs in this market. We're trading basically right up against our overnight high right now. We just matched it. What are we looking for? If we are long in overnight activity, if we are just kind of waiting for the market to open and for longer time frame traders to come in and buy this market, then we're going to kind of sit and hold these longs. But if it doesn't happen, if we can't accept above the overnight high, that may scare some of our overnight traders into providing us a better trade location against weakness if we are of the frame of mind that we think this market is going to continue to the upside. Of course, why not? It just seems to do that until it doesn't. So it's there's good news in the marketplace. The equities markets are not necessarily indicative of the overall economy, which the overall economy seems to be good. Why wouldn't this thing continue to go? It just seems like there's a lot of longs in this market, and at some point we're going to get some kind of decent pullback. This 44,000 level here is weekly kickoff high, the big fat round number from last week. It was a little bit sticky on the way up on Thursday, but once it accepted, we left that late spike. We're opening above the late spike. That means acceptance of higher price. Overnight longs, all-time high in overnight trade. Interesting markets today. Interesting markets. The NASDAQ finally showing a little bit of a pulse here for us. The possible double breakout of this range-bound activity has price continuing to move to the upside. We've got our weekly kickoff level here, I believe, same as last week. You know, it's a little higher than last week, of course. It is weekly kickoff high in NASDAQ is 13,573. We're marching our way towards there now. Weekly kickoff low is all the way down here at 12,852. 12,852. That's not correct here. 12,852. Right about here is where our weekly kickoff low is for this week. It's going to be a breaker for a continuation to the upside if we accept back down below that level. We've got a new support level here. These swing highs, these highs here and this swing high, we were looking at as potential resistance. We managed to hold above those on that abbreviated session on Friday. We've held above them in the overnight today, and we seem to be continuing our move to the upside. What does that tell us for the 30-minute chart? Settlement down here. Oops. Hang on. Settlement down here. 13,316 even. Put that on your charts. We've got some overnight longs here. This is a previous weekly kickoff level here. That is, let me see here. That's just a previous weekly kickoff level from the past. We are holding on overnight longs here, but again, we've got a gap. There's no late spike in the NASDAQ, which I do find interesting. We had the late spike in the S&Ps. We did not get that in the NASDAQ. We're holding a lot of overnight longs here. Again, we're nowhere near all-time highs. We did break out to the upside. It just says the market just says it's healthy to the upside. No real volume or open interest to help us from Friday. So let's think about what we're doing. We've got some longs here. I don't want to fight any major moves to the upside, of course. And this previous weekly kickoff level in play, it was resistant last week on Friday. It was resistant early. Now we're above it. If we get a pullback down towards it, that might be enough to either find buyers at that level, or if it can't hold that level, that may be enough to break our overnight longs to push us back towards a more reasonable level, a lower level to look for a weakness for a long. Gold. What is up with this gold market? All right, so last week we kind of put in a W bottom here. We've got a little bit of a double bottom here. It's a W bottom. It's a reversal pattern. If we really want to break the break to the upside and continue this reversal pattern, 1750 weekly kickoff high is going to be very important. In short time frame, we've gotten into rather a sticky area here. I call this a sticky area because it was an area of balance not too long in the past that the market was really kind of stuck in there. So we're really kind of up against an area that I think is going to be difficult for us to get through, barring any major unknown news or something like that. So we're going to be looking at short time frame levels to look for opportunities here, because the market is kind of range bound in this area. We're going to be, again, looking for short time frame levels that might be respected by short time frame traders, which we believe are somewhat in control here. There's two kind of weekly kickoff levels here. 1706 was last week's. We really tried to drive below it. We were unable to do so. So I still believe that it remains somewhat impactful if approached by price this week. Then we've got our swing lows here from here, the beginning of March and then to the end of March. Same spot, also an interesting area if revisited. Take a look at the 30 now. All right, so settlement is here, 1728.40. Put that on your charts. All of our overnight activity has been pretty much inside value from Thursday. This is short time frame control. The market has not found enough sellers to take out the overnight low, hasn't found enough buyers to take out the overnight high. It's inside range and inside value. This suggests to me patience, and that we may find better trade locations as the day goes on. So I'm going to be really kind of focused on our overnight high and overnight low for opportunities in gold. We don't have any overnight inventory. There's no gap. There's no change in the perception of value of an ounce of gold here. So try and stay patient. Again, many European and some Asian markets, and including New Zealand, they're closed today. So we're going to see some muted activity. I was looking at the Euro earlier, thinking, well, there's Europe's pretty much closed, and there's probably not going to be a lot of activity. And all I really have to do is say something like that, and the market makes a liar out of me. The downside digestive state that the market is intact. It's probably the fourth day or fifth day, I would say, that we're in this balance and short time frame control again, because Europe is closed. 30-minute bar, 30-minute chart. Soon as I sat down and wrote that down, the market found some buyers, and the market coming into really kind of testing the high from Friday's abbreviated session. Settlement from Friday's abbreviated session is settlement. It is 1745 and a half ticks. Put that on your charts. Looking at it this morning, we were in range and in value. I'm thinking, okay, there's probably not a lot of oomph in this market, knowing that Europe is largely closed. So, well, we're kind of at an important level here. If we can't take out the high from Thursday or Friday, we may see some overnight longs or some new longs that are in this market get a little bit nervous. So I think our current regular trading hour session high, as well as these highs here, are somewhat pivotal. And again, with limited participation, I'm thinking, who is going to be here to continue to push this market higher is my question. Just because I question that doesn't mean it can't happen. As a matter of fact, usually when I do question something like that, it happens. All right, yields are hanging just below that 1.75 here for the 10-year. This weekly kickoff low is pivotal, 130 and 30 and a half ticks, 30 and a half, 30 seconds. We've taken a look down below it. What really is important, I think, for us today is, are we going to remain somewhat downside digestive in this range, or are we going to accept and continue down below the weekly kickoff level here? So the weekly, this 130.29 is weekly kickoff low, is going to be really kind of pivotal for us today. 1, 2, 3 days, 4 days without acceptance below it. If we finally exhaust the buyers there and we see some continuation to the downside, it might be an opportunity. But until there is true acceptance, which is a subjective term, then we're going to be probably looking for this as a support level until proven wrong. A support level until proven wrong. What I do like about it is it offers us an opportunity to limit our risk, and that's number one on any trade that I'm taking, is what kind of risk do I have to take? What is the potential reward? So let's take a quick look at the 30, and we'll get down to business for the week here. So here's our move down below here just before the regular trading hour open that is showing signs of rejection. The market looked lower, did not find any new business down there, and we're seeing the market come back into range and back into value. We may have missed our opportunity to look for this long down here, but rest assured there will be opportunities as the day goes on. This is the abbreviated session from Friday. Settlement again, 130 and 30 and a half ticks, 30 and a half, 30 seconds. So I'm going to be patient as we are back in range and value. If we get another opportunity down here, that would say something to me and provide a potential long. If we accept down below it, then it's a potential short. Be careful though, going long above, short below, long above, short below. If it becomes magnetic, it can chew you up pretty quickly, especially in these 10 years. All right. So I've missed you all for the last 3 days. Glad to be back with you, as always. Looking forward to an interesting and profitable week for everybody. We're looking for everybody's success here, and we're going to be with you every step of the way. We've got a lot of cool things coming out in the coming days and weeks here at Top Step, things that we think are going to help. And we're looking forward to being able to provide these things to you. And I can't say anything about them very specific right now, but look for cool things coming out soon. All right. Oleg, good to see you. And that's going to be it. We've got plenty of time for our preparation for, well, hopefully you've already done your homework for the equities open to this morning. We're just going to take our deep breath. I hope that you do that with me. It always makes me feel good. Stay humble, grateful, creative, and patient in your trading today. Looking forward to seeing you this afternoon. Dan should be with you for the market recap. Lots going on this week. Group coaching, Q&A with the founder, and more to come. So trade well, everybody. Have a great trading day. Get out there and profit. Trade well. We'll see you later.